Hello, I'm Finola Burke from Research as a Service, and welcome to our 2022 Outlook series. In this session, we're focusing on data, insights, and media company Pureprofile, ASX ticker PPL. And joining us is Managing Director Martin Filz and COO/CFO Melinda Sheppard. Welcome to you both.
Welcome. Oh, thanks, Finola.
Thank you very much for having us, Finola.
So Mel, I'm going to start with you. You reported a very strong second quarter with revenue up 31% to 10.6 million, EBITDA up 82% to 1.4 million, and cash receipts up 54% to 11.2 million. Are you experiencing the same momentum going into this quarter?
Well, thank you for the question. Very good question. And we are incredibly pleased and thrilled with our Q2 results, and obviously the half one preliminary results that we put out today as well. We're obviously partway through January at the moment. We're seeing a lot of activity in our business, probably a lot quicker than what we'd normally see when we come back from the Christmas break in Australia in particular. I wouldn't be expecting to see any slowdown in the growth. Historically, Q3 is a bit of a slower quarter for us, particularly with January, with a lot of businesses, particularly in Australia, effectively on holidays for nearly the whole month. So it is generally a lower revenue month and a lower EBITDA month, but the growth that you will see on last year will be relatively consistent with what we've just reported.
Yeah, spot on, Finola, and thanks, Mel. I'd just add to that this is sort of what we're seeing now is all the work that has been put in place over the last 18 months or so. And I talk about the first pillar of our strategy being about being global. And a lot of work's been done when I joined the company and joined Mel. We already had 5 offices around the world, but many of the offices were almost independently run. And so a lot of work has been spent in the last 18 months ensuring that we are truly global, that everybody has the same experience no matter what office they're in. And now that's 90% done, there's always bits and bobs that needs to be added, but now that's 90% done, that really gives us the opportunity of accelerating the non-Australian markets. And we've opened 2 new markets in Singapore and mainland Europe last year, added salespeople. And so really now it's the execution to that global initiative of adding salespeople and account managers and client focus people around the world.
I'll come back to your the business strategy for outside of Australia, but Martin, part of your growth strategy also involves partnerships. And you recently announced partnerships with the Asian parent and I Go Direct. Can you take us through how these partnerships work and how they will be reflected in your future financial performance?
Yeah, thanks, Finola. It's an important strategy for us moving forward, is actually to expand existing markets and to move into new markets with partners. So what that fundamentally means is we'll take Flybuys as an example. Flybuys has 9 million Flybuys card holders in Australia, just brought on board Bunnings and Officeworks. You can use your Flybuys card there as well. But so Flybuys continually is giving rewards to people for doing shopping. So what Flybuys is also looking for is to say, actually, can my audience earn rewards by doing something else? So they become more sticky. So having the ability to earn rewards by doing surveys or by giving insights or by giving data is another way that a Flybuys member can earn points other than going into Coles, Officeworks, etc. And so it's interesting to the partner that they want to increase stickiness. They also want deep insights on as many people as they can gather, so that this helps them have the right products on the shelves, the right messaging, the right partners, etc. So they want to build up the insights, which they can do when they build up this community with our audience builder tool. And then thirdly, it costs them no money to roll out an audience builder, because actually we do a revenue share. So we do a revenue share with the client. So suddenly I can roll out audience builder that that plugs directly into whatever their reward system is. Flybys was a bit of extra work, but with a smaller partner, they can be up and running in a couple of weeks. That actually immediately their members are earning rewards, they're generating insights, and they're generating revenue. So that's why they do it. Why do we do it? Because that gives us many more data points in a market. So adding Flybys in Australia is fantastic for us. Huge number of more data points. Our existing clients could gather many more insights, and also new clients can do research. So great. And I go direct also, a great business. We worked with them quite a while, but they haven't used Audience Builder. So that will again give extra data points in Australia. When I sign somebody like the Asian Parent, 39 million members, bigger version of Flybys across 11 countries, that gives the same benefits to Asian Parents, stickiness, more insights, revenue share. And to us, it enables us to grow markets that we are either not directly in or not particularly strong in. So we've had Singapore for about a year. We'll launch first in Singapore. That gives us an immediate boost to data points in Singapore. We can go to many more clients to say, hey, run insights with us. And then they're in 11 or 10 other markets. That gives us the ability to roll out into new markets without us having to build our own data set. So because it's a back-end revenue share, we don't have to put the money in our hand in our own pockets to recruit panelists up front and then to go and sell them to clients. Actually, those panelists come from the partner, or members come from the partner, and then we go to see clients, and then we do a revenue share. So speed to market, efficiency to rolling out. We don't have to bring our own investment, and immediately you're known. So it's much easier to go to a client, let's say in Malaysia, to say, we work with the Asian Parent, we have mothers with babies, you, Mr. Unilever, what research would you like to do about your baby range products that you have? You've ticked a box. Asian Parent, I know. I've got a niche, mothers with children, and Unilever will buy from you because of those reasons. So when we look to new markets, sorry, I just add, when we look to new markets, then again, if I want to break into a new market, it's it's advantageous for us to find a partner to launch into that new market, to then go live with their member base, as opposed to us having to build our own.
Just touching on that, the Asian Parent, I don't expect we won't expect to immediately see that come through, but presumably over the next, what sort of time frame would you expect to see that being a meaningful part of the business?
Yeah, that's a really good point. So to Asian Parent, we're going live in Singapore. Technology should be all up and running end of February-ish. We'll then build up that membership base sort of March, April. And so you would start to see some revenues coming through, ideally end of March, beginning of April, as you build that up. But the real impact will come in financial year 23, when you've got an established member base. Clients know that you've got that, Procter & Gamble's, Unilever, etc. know that you have that niche audience that's right for them, and so you will then start to see that coming through.
Yeah, that makes sense. And Martin, your self-service platform, or the SaaS platform, that has benefited from the Flybys relationship, and it continues to grow rapidly. How much of this growth is being driven as well by COVID tailwinds with the shift to online? And do you think this is sustainable?
Yeah, that's a really good question. Yes, our SaaS revenues are growing. We're really clear about our offerings and our products now: Insights Builder, Audience Intelligence, and Audience Builder. The three SaaS solutions that we have that generating insights, however a client uses those, either going to our panel, using our data, or tapping into their own audiences. So we're much slicker about that than we were 18 months ago. Those solutions have been developed further, and we've added to the teams that are supporting those. So we're seeing that growth because we're doing it better, and we're the right messages to the right clients with the right benefits. Generally, if you look at COVID is great for any data and any media company, and you see share price go up. I was talking earlier, you've seen YouGov go up since October about 20% in their share price. So data, media companies, great. More people are online. Brands have got to interrogate this data, understand their audiences, and then brands have got to reach the audience in this very cluttered online space. So they need specialists who can do that really well. So that's positive. Generally, both industries, they're saying that if I take Australia and I take Data and Insights, ESMR, which is our global body, is expecting to see about a 13.5% rise this year. And quite a lot of that is due to COVID. So yes, your question is right. They're possibly in markets is sort of 8 to 15% growth because of COVID. However, we're far outstripping that. We've 44% growth in half one. So we've got a great tailwind. We're taking advantage of that tailwind, but the business is growing far beyond any bounce back or any COVID positivity that we're seeing. But listen, data, insights, and media companies, we're hot at the moment, and it's a great industry and a great vertical to be in, sector to be in.
And Mel, you have a strategy to grow the business outside of Australia. When could we expect to see offshore revenues outstrip what you're generating in Australia? And do you have a target timeframe in mind?
Well, yeah, we absolutely do. So we've been working, as we sort of alluded to in our announcement, we've been working on a longer term plan for the business over the next 3 years. And that's finalised now. And we're really looking forward to sharing some of the details with everyone in our half one update, which will be at the end of February. Look, we will continue to see the growth outside of Australia outstripping Australia growth. That said, Australia will continue to grow. We're still heavily invested in Australia. We still want to see growth in this region as well. Ultimately, by the end of FY24, we would love to see the revenue outside of Australia be the same as what we've got in Australia, and the plans that we're working on at the moment would suggest that that's incredibly possible for us at the moment.
Yeah, just to add to that quickly, thanks, Mel, and again to add to that. UK market 14 times bigger, US market 40 times bigger than the Australian market. We wouldn't be executing well if those markets didn't overtake Australia. That said, like Mel said, Anna, who heads up the Asia Pacific business, and Tim, who heads up the European US business, they're phenomenally competitive, and Anna has no desire to hand over the mantle of being the biggest region in Pureprofile. So she's doing everything she can to keep growing that business quicker than Tim can, and Tim's trying to get. Lovely to see competitive people like that. They do it in a friendly way. But look, if a good partner comes across in the US, I wouldn't want to spend a lot of money building out our US business where we're doing that off of our own back, where there's a lot of noise. It's a big market. You can easily get lost. If we find a really good large partner, perhaps a niche partner like we have the Asian parent in Asia, I think all bets are off, because that can suddenly, out of nowhere, accelerate our US business. UK business, we're adding salespeople. We've already got about 18 people in the market, as the results show, is the growth's outstripping Australia. So there's a natural point that the UK will overtake Australia if you start to extrapolate out the revenue. But if we find a big partner, I think that the US will come from nowhere.
Well, Martin and Mel, we're looking forward to catching up with you through the course of 2022 to check on Pureprofile's progress. Thank you for joining us today.
Thanks for having us, Finola.
Yeah, thank you very much, Finola.